All right, at this point, you guys are probably sick of hearing me say this, but I just had another record trading week. I made $632,000 trading mainly market maker models. I'm not going to cover every single trade that I took last week. If you guys want to see some of those executions, I've posted them all to Twitter. But I am going to cover one setup that I took on Friday that was an A+ setup and covered all of my criteria. So in this video, I'm going to break down exactly what a market maker model is, the process, the logic, the execution, and I'll give you guys an update on my Apex and Tradeify funded accounts. So without wasting any more time, let's get right into it. Okay, first, let's talk about what a market maker model is and how to identify it. So when I'm thinking about the market conditions, I'm really only looking for 4 different conditions. Is the market consolidating? Is it going through a markup phase? Is it going through a markdown phase? Or is it a reversal that we're seeing? With a market maker buy model, essentially we want to be able to see some type of consolidation or a markup phase. And then typically, if there's a high time frame level that this market is possibly reaching for, okay, how is it actually going to get there? Is it usually going to go in a straight line? Most likely not. We might see a retracement, we might see more consolidation, and we might see all these different levels of pullbacks before it gets to that specific level. Now, I would argue the best time to enter the markets are when they're slow. Okay, so when we're actually identifying periods of consolidation, this is where traders get chopped up a lot. This is where their bias changes a lot because they don't actually understand that after markup phases and markdown phases, the markets have to cool off for a bit and find some point of equilibrium before they can send it higher or lower again. So when the markets see a massive run higher, typically you'll see some sideways price action. And you guys will see that across multiple markets. If you guys just check NQ, right, we had this really precipitous drop off recently. And then we have a bit of sideways price action. But if the market doesn't completely reverse from those specific levels, right, what are we anticipating that this is going to be then? This really is just another consolidation for a leg lower. So when we're thinking about market maker buy models, and this here is a market maker buy model, we can really just draw out the different periods of consolidation. So let me just grab a shape tool here, and I'll draw out some consolidations here. So as you guys can see, these are all periods of reaccumulation. So we'll have accumulation, markup or markdown, or retracement, reaccumulation, markup, reaccumulation, markup. Okay, so all the market is doing is going from periods of consolidation to periods of expansion, period of consolidation to period of expansion, period of consolidation to period of expansion. When we're not expecting a smart money reversal to occur until it reaches this high time frame level. You can put high time frame level or high time frame PD array, however you want to annotate that. But this is all just happening on a lower time frame. Okay, this might be one daily candle where it's just going up there very quickly, and then maybe it's taking out the previous day's high. Now, your time frame is going to matter based on where you're identifying the market maker model. But the high time frame level will usually come from a time frame that's above where you're doing your analysis, okay, or where you're identifying this market maker model. Okay, so if I was identifying a market maker model on, say, the daily time frame, maybe I'm trying to identify a monthly high or low, right, or a quarterly high or low. So that high time frame level, again, is one level or 2 levels, 2 time frames above where I'm finding this analysis. Because if I can spot these market conditions and the overall direction of where this market is going, I'll have a greater idea or a sense of where the target is going to be. Okay, and then vice versa for market maker sell models, right? We have a possible period of consolidation to start. We have a markdown, redistribution. So this markdown period is distribution. This consolidation is redistribution. And then we have another leg lower. And then we have another redistribution and then another leg lower. Okay, so all these consolidations, this is where traders get chopped up a lot because they don't know that the market has to cool off sometimes. It has to cool off before it's allowed to go lower. And oftentimes the best times to enter are when these short-term consolidation highs are being ran out. So if you have consolidation here, And if you see a spike above that consolidation, that's where you're going to find your best entries. Okay, if it breaks back into the range and then goes sideways again, you know that they're trying to manipulate people long into the market. But when the overall bias is bearish, okay, and let's just say this market maker model, we have a run higher, and then we hit a high time frame level. But our weekly bias, okay, we're going to tie this all together. Our weekly bias is still bearish. Let's say this weekly opening price, let's say the last week closed here, and the new week opened up here. Now all of a sudden, what? We have a gap. Our high time frame bias is still bearish. So what we actually want to see is what? Monday, Tuesday, and Wednesday, possibly put in that high of the week higher. Okay, this you know, it's not going to be black and white. Maybe the high of the week is created on Monday. Maybe the high of the week is created on Tuesday. Maybe the high of the week is created on Thursday. Okay, but our high time frame bias is still bearish. It's just being able to identify the condition that we're in, waiting for what? A market structure shift or a change in the state of delivery. And then we're going to just target what? The possible gap, or maybe there's liquidity below the gap. Okay, so what we're looking at is a weekly profile, right? Using market maker models though. So we have this consolidation, markup, consolidation, markup, markup. So all these consolidations are levels of reaccumulation. Okay, so people who are trying to get long, targeting this high time frame level, are going to continuously accumulate orders in here because maybe they're really large and they can't get in their orders all at one price. So they'll enter all their orders. The market might jump. As it's retracing, they're going to enter more orders and accumulate that larger position that they can put on. And then when it gets to that high time frame level, they distribute it. So after they distribute their long positions, right, we got a smart money reversal, maybe a market structure shift. And then the market maker sell model comes into play. So we have a market maker sell model. We have this smart money reversal. We have distribution, right? Redistribution. And then our terminal point is going to be what? The gap or some level of equity down here. We might have equal lows down here. All right, this is the basis of a market maker model. When you can identify those conditions, trading to a high time frame level, and then waiting for a smart money reversal, redistribution, or a signature that's telling you to get on side before it runs to the terminus point. So the most important thing with identifying market maker models is just identifying what market condition we're in right now. So if we're in a consolidation, are we going through a reaccumulation phase, or are we going through a redistribution phase? Are we in a markup phase, or are we in a markdown phase? Okay, so when the market is expanding, it's probably not the best time to enter. The best time to enter is typically inside of those consolidation periods, because what you're trying to do is build up your order inside of here. And then as it's being marked up, that's when you're exiting or possibly waiting for another entry to accumulate more. Okay, and then you're going to offload where? At the top, the terminus point. All right, and then we're possibly waiting for what? A market structure shift here. And then order flow might change. We might get this mark down. We might get redistribution, mark down, redistribution, mark down to what? Another terminus point. So again, identifying the condition that you're in, extremely important. So if you guys want to see how I actually trade, I've put together a simple framework PDF guide. I'll leave a link in the description. Now let's get into the chart breakdown. So this is just a very, very quick understanding of a market maker model. Now, I'm going to cover a bunch of things in this chart breakdown that you guys really need to pay attention to, because I did have some people that weren't understanding that there was a terminus point to this move right here, and they were trying to go long on Friday. And I'm sure many of you guys got caught off sides on this move as well. So the most important thing that I am trying to look for a market maker model is, what is the direction of the weekly candle going to do? Okay, I'm using weekly profiles for that, but I'm also studying the actual price action. So the first thing that I'm going to do when I come to the charts is, what is the weekly open price? So as soon as Sunday opened, we have a new week opening gap. So as soon as the market opened, I already have an understanding that there's an inefficiency in the market. Okay, we don't often get massive opening gaps. Okay, sometimes we do, sometimes we don't. But these opening gaps are very sensitive to price action. And the most important part is that, when we're looking for a weekly candle to form, typically there's a wick on both sides of the candle. So early in the week, if it's trading higher, I'm almost anticipating that the market is just manipulating. Okay, and what did we get here? So we gapped up higher, left behind these lows down in here. So these lows, in my opinion, represent what? So these lows are engineered liquidity. If the market is going to go lower, what they're doing is leaving these lows in place so more and more sell stops can be built up below these lows. Okay, and that creates liquidity in the market, because if this market just leaves these equal lows in here, right, none of these stops that were below this low have been triggered. None of them. Okay, so everybody who had their stop below this previous low, none of them get triggered. And as the market's trading away, right, more and more and more orders get stacked up below these lows. So as it runs away from that level, I just understand that there's more and more and more money being left there. Now, there's an important quote that I reference all the time, and it's by Jim Rogers. He's a legendary trader. And he says, I just wait until there's money lying in the corner, and all I have to do is go over there and pick it up. I do nothing in the meantime. Now, this is a really huge and powerful lesson that I learned, because when the market is engineering liquidity like this, the way that I view that as there's just a pile of money just sitting below these lows. Okay, and this was the draw that I'm looking for. So when I'm looking for a market maker model, of course the draw is extremely, extremely important. And then when we get into the lower time frames, that's when I'm using my analysis on market maker models to try and target the draw. Okay, so after we get this new week opening gap, the market trades higher, and it trades where? To above this swing high here into a 4-hour fair value gap. Now I'm going to drop down to the lower time frames and just show you guys what I was seeing as far as a market maker model. Now, after Friday, right, we already had a bit of a understanding that this market might turn around, because we had this breaker here, right? So we had a breaker. You guys saw that we had a massive run Friday to close the week. So what do we have here? We have a markup, right? We have this markup. I'm not going to draw it because it'll get a little messy. We have this markup, reaccumulation. Markup, reaccumulation. Markup, reaccumulation. So this market is already displaying signs that it's in a market maker buy model. Then we have a consolidation here. You guys can see here that they created the consolidation and then did what? They have this consolidation. They ran out short-term lows, and then they pumped it higher one more time into that swing high. Note the day. Okay, this is Tuesday, right? So Tuesday, Monday, Tuesday, as it's trading up higher into what? That 4-hour swing high point, which is what? Our high time frame level. So you can look at that high time frame level as well as the 4-hour fair value gap. Not only that, but now the weekly candle doesn't have a wick below the open. So if you guys check the open and the low right here, you guys see on my screen here, in the top left corner up here where it says OHLC, that's open, high, low, close. Okay, so look at the open price, which is 20,050.50. Look at the low, 20,050.50. So at the time of this market trading higher, there was no lower wick. Okay, so not only am I seeing a market maker model in play, we also don't have a wick. So as it's up here, I'm expecting some sort of reversal. Okay, so we have a reversal that occurs on Wednesday. All right, and if you guys didn't catch the reversal on Wednesday, that's totally fine. I'm not covering that trade right now. I'm covering the one that we took on Friday. Okay, so this here is our market structure shift, because it's this last low for this swing point. Yes, you could possibly use this one as well. But what we're looking for is a market structure shift and a smart money reversal. Now, the smart money reversal needs to displace lower and pretty aggressively. So this here, right, an aggressive displacement lower, and it's taking out lows, and we're not respecting those lows. So if you were bullish, you would expect that we would take out the low and then turn around. But this market just keeps going down. And where do we go to? We went to this level right here, which is the new week opening gap. Now, we still don't have a trade yet. But what we do have is a markdown period or a smart money reversal. So after a large expansion lower on Wednesday, this market dropped over 2% on Wednesday. Just FYI. Usually after days where you have very large expansions, we'll go through a period of consolidation. And just like I showed you guys on the Miro board, when it's going through that consolidation, runs above short-term highs are what? They're bull traps. They're just trying to get people to go long above the highs. Okay, when you're looking at this run here, right, all of this market structure and price action is just sideways. Okay, so this is Thursday's price action. Now, after Thursday, right, I am just analyzing what happened that prior day. We've taken out Asian range highs, failed to trade higher. We're getting a lot of indications that these markets, they don't want to defend 20,000. And 20,000 is a, very large psychological level. So the fact that they don't want to defend 20,000 based on this markdown, this sideways price action, usually you want to see a quick reversal after a day like this. If it doesn't put in a V-shaped reversal, usually it's a sign that it's going to go lower. Not only that, but we get a closure on the day below what? Below the new week opening gap. So as soon as we're closing below this new week opening gap, right? There's nothing in here that's telling us that the market is bullish. Absolutely nothing. So if you guys came to the market on Friday looking for reasons to go long, you're totally off sides. And I've mentioned this multiple times. All right, when there's a bearish bias, and the order flow is bearish, every single bullish PD array is going to fail. So you guys are going to notice inside of my live stream that I don't plot any bullish PD arrays. Why is that? Because the draw on liquidity is so obvious. And just like that quote that I mentioned to you guys with Jim Rogers, he's just waiting until there's money lying in the corner and he's going to pick it up. Okay, so if you are expecting that this bullish fair value gap is going to hold, you're not recognizing that there's a large pile of money screaming at you right here. Okay, and what do we have here? This is a classic market maker sell model that is underway. Right, all of this here, right, since this Friday, right, we had markup, reaccumulation, markup, reaccumulation, markup, smart money reversal. As soon as we see the smart money reversal on Wednesday, now all of a sudden my weekly profiles come to play. And this is where I don't look for TGIF setups. All right, when Tuesday high of week is in place and we have this aggressive run lower, and then we have sideways price action, I'm looking for what in the market maker model? I'm looking for another markdown level, right? Another period of markdown or distribution. Okay, because if Thursday was going through this redistribution, which it was, okay, this is Thursday. It's redistributing short positions. So this markdown, sideways price action, Thursday, all of a sudden I have a plan for Friday. I already know what I'm aiming for. I'm aiming for these equal lows because this, to me, is the terminus point of where that market maker model may end. And yes, it did carry through, but to me, that doesn't matter. I had a clear level in mind that this market is going to go to. You guys can see that all of these supposed bullish order blocks or all of these supposed buy-side imbalances, they don't mean anything when the order flow is that aggressively moving lower and you're inside of a market maker sell model. So what you're looking for in a market maker model are all these bullish PD arrays to fail. Meanwhile, all of the bearish PD arrays are being respected. So all the old short-term highs, right, we're not getting above them. Okay, so this short-term high, look, it failed above it. There was no displacement higher. This short-term high failed above it. This, even on a lower time frame, look at these short-term highs. Just being ran out, and then we get bearish engulfing candles. Okay, bearish engulfing candle. Bearish engulfing candle here as well. Right? Trading above higher to suck in liquidity before it makes that run to where the money is. This is where all the money is. Okay? All of this is just sideways price action inside of what? This market maker sell model. Okay, so after breaking that down, let's dive into the actual live stream, and I'll kind of walk you guys through the trade process. All right, so coming into the live stream, I was already short. I was short overnight, and now I don't recommend that to most people, but my ideal entry had already occurred. Okay, my ideal entry had already occurred on Thursday after running out that short-term high, so I had ultimate confidence that this market was in a market maker sell model. Just the fact that we ran out these short-term highs and closed lower below the new week opening gap. You guys can see that I'm, looking at this new week opening gap, showing you guys that all this market is going through consolidation. My stop loss was above 50% of this wick right here. Now, this candle right here is a bearish engulfing candle, right? And that's the one that kind of propelled us lower to get us to close below the new week opening gap. Now, my target is where? It's exactly at these equal lows down here. Very important to note. And I know that we are in a market maker sell model based on the price action that I'm seeing throughout the week. Now, where TGIF doesn't pan out is if we haven't hit that high time frame level yet. Okay, TGIF, in my opinion, only will work if it's in the direction of your high time frame bias. Okay, but my high time frame bias is not bullish. So if I see the market trading lower Tuesday, Wednesday, Thursday, I am not trying to do a TGIF setup long. Okay, in fact, I'm more likely to just continue with the prevailing trend and that prevailing market maker model, because we haven't yet hit the high time frame level that I think we're going to hit, which is what? This huge bag of money that's sitting at the equal lows down here. Okay, so I was already short ahead of the open. Right now, on stream, it's 9:30 in the morning, and I was already in this trade for over 12 hours. So as soon as the market rolled over, I entered short at 6 p.m. because I'm allowed to at the futures firms, and I was just holding. I had a wide stop loss. Again, I've posted this on Twitter before. My stop losses are wide because I'm swing trading. I'm not intraday scalping. Okay, but if the market moves 1,500 ticks, I don't care about having a 400 tick stop loss. Okay, I just adjust my contract size. And you guys can see here that I only have 5 micros on. So it's not like I'm risking the boat to make this much money weekly. I'm trading micros. I'm trading 1 to 2 minis, and I very rarely go over that. So you guys are seeing me build a huge buffer, right? The Apex accounts are sitting at $86,000 in profit right now, which I'll get into after the live stream recording overview. But I've done it mainly using micros, okay? Mainly catching these intra-week or intraday large swings. I'm not just aiming for a couple points, okay? So again, my focus is on these equal lows down here. All right, we have the NWOG. We've got a massive market structure shift. This is kind of me walking you through the market maker model. Now, I had this fair value gap plotted on the hourly, and this is where this would have been a situation where I could have added in. But my problem was I over traded a bit on Thursday. I should have just had a wider stop, and that's what I mean by having ultimate confidence in your trade setups, because you will go through periods where you're stuck in that consolidation. Okay, you're trading inside of that consolidation. Your idea might be right, but the timing isn't right. Do you understand? So your idea as far as a market maker model might be right, and you're actually getting in at the best time, but it's your stop loss placement that's kicking you out of the trade. And it's your insecurity around the analysis that you're doing that is maybe getting you to flip sides on a market that is predestined to go lower, okay? So this would have been an opportunity to scale in, just based on the open and how we reacted from that hourly fair value gap. I would have moved my stop down lower, added another contract, and just left it alone. Right? All of this price action here should not be deterring you from where the market is going. Yes, it's chopping up and down, chopping up and down. And this is why I don't trade the low time frames. You guys will very rarely see me trading the 5-minute time frame. See this price action right there? Not making me nervous whatsoever. I'm just trying to stay cool, calm, collected because I know that the market is going to expand at some point lower. Now, if we look at the weekly time frame, you guys can see that we traded higher, and just like I mentioned on that on the mirror board, that's exactly what I want to see. I want to see if this market is going to close lower on the week. It's going to open, trade higher to manipulate. Then you're going to see a market maker sell model on the lower time frame to trade lower if your bias is correct. Okay, all of this, guys, is live. I live stream 3 times, maybe 4 times a week for my group. Okay, so we already got the 10 a.m. candle closure, and you guys can see how bearish this thing closed. Okay, this is why this buy side imbalance wasn't of interest to me. I don't care about buy side imbalances when the destination of the trade is down here. So that next 4-hour candle, all I'm expecting is another power of 3 higher. So, okay, this little wick in here would have been an opportunity as they're redistributing before another leg lower on a lower time frame. And this trade ended up being about 1,500 ticks in profit. I could have held all the way, but I exited just a couple points. And you guys can see that I tried to move my stop loss down, but for some reason I have issues with my trade copier, and it kicks back an error that says that my order is not found in TradingView. So I pretty much had a mental stop at that 5-minute fair value gap. So if it traded back up there, I did not want it to go above that level. And I would have just cut manually. So I put that line there, being that my line in the sand for exiting. Okay, now when we're getting this close to your target, guys, don't be greedy. How many of you guys have had trades where you're getting this close to your target, you don't take profit, and then you give back a ton of it? Okay, are you really going to fight over those last couple ticks? To me, I don't. I don't really care about fighting over those last couple ticks. And there you guys can see me close the trade. So there is the full execution. You guys can see here. We sold it as soon as the market opened at 6 p.m. for that new Friday candle. My stop loss was here, and then my take profit was all the way down here at the destination. Okay, that was the terminus point for my market maker model. Now, we all know now that the market kept going lower, but I'm content with getting a 3.5 to 1 on Friday. So going over the funded accounts, you guys can see here that this was my video that I released last week. You guys can see the balances were all at 211K, and the P&L was at 61,600. Now, this was the trade that I took on Friday that put me at almost 236,000, 237,000. This one account is at 238,000. I'm not exactly sure what happened there. Definitely had some issues with the trade copier, probably not getting the exact fills. Now, if you want to double check all these balances where I currently stand, right, all these accounts are up almost $87,000. If you total it all up on these Apex accounts, I'm up almost $1.75 million. I have to trade for another 12 trading days before I get an uncapped payout. And once I hit the uncapped payout, I'm going to withdraw the rest of the profits. So right now, I can only withdraw $27.50 per account, but I'm not taking a whole lot of risk on these trades, guys. I am just getting in at the right times, putting on the right size, and letting the trades pan out in my favor. So if you want to go through, double check these balances here against what I have here in NinjaTrader. All right, nothing here is being photoshopped. You guys can see here that it's all 20 accounts. I'm all copy traded on all of them. And now I've got 12 more trading days to go before I can withdraw these full amounts here. Now, I'll also go over my accounts at Tradeify. You guys can see here that this has been my current month. So far, it's been really great. I haven't tilted a whole lot. I haven't, had major red days. There are days where I'm taking way too many trades. You guys can see here this week was not good for me whatsoever. Wednesday and Thursday was very choppy. I ended up taking like almost 10 trades, but that was because I kept getting knocked out at break even. You guys can see here that my average loss is $1,200. Okay, but my average win was $67.95. So my average win to my average loss is almost 5 times bigger. Now that allows me to have a lot of green days because my losses are being minimized. I'm not taking massive losses. And my trade win percentage is extremely low this week, but I still came away with 5 winning days. So this is across 5 accounts, keep in mind. So across the 5 Tradeify accounts, I had 10K, 26K, about 37K, 47, about $54,000 in profit. Actually, $64,000. It tells me right here. This is the week of 3/23. So from Sunday to Friday, $65,000 with his 23% win rate. You know, who wouldn't be happy with that level of money? But it's all about proper stop placement. Okay, when I was inside of this price action, right, I was over trading in here, getting chopped up at break even because the market would go in my favor and then it would come and stop me out. It would go in my favor, come and stop me out. So at the end of Thursday, I said, you know what, I'm not going to have a tight stop loss because I know that I'm in a market maker model. I'm just going to put a wide stop loss, right? It's above 50% of this candle wick. And I just left it alone, aiming for this target down here. And you guys can see that I only took 1 trade on Friday. So again, less is more. You guys can see that I took 10 trades on Thursday. That was a terrible day for me. Even though I profited more than Friday, I just know long term, if I continue to tilt like that, it's going to have a negative impact on my trading. So the following day, get back on track, take 1 trade, 1 execution, and flawlessly manage that execution. And that's why Friday, if I had to grade both of these days, even though Thursday came away with more money, Friday, clearly the better day. So if I had to grade Thursday, an F. I don't care if I made money. And this is where I separate myself from majority of people that are consistently losing in the markets. And this is where the majority of profitable traders separate themselves as well, is they're not thinking about the money. I don't care if I end the day green or red. Did I follow the plan? Because long term, that's the only thing that matters. Did I follow the plan? Did I follow my rules? Now, I wouldn't say that I was completely an F because at least I managed the risk appropriately. I was never taking massive losses. I was just over trading. I didn't have proper stop losses in place. So on this specific day, I took too many trades, but I also mitigated by moving my stop losses. I wasn't taking full losses that day. You know, I didn't even hit my daily loss limit. I was just getting stopped out constantly at break even. So just having a wider stop loss, because knowing that we're going to go down to these lows would have been much easier. Okay, way less stressful, way less trading. I didn't need to sit in front of the desk for 5, 6, 7 hours, and it would have just been much easier money to make. So guys, I hope you enjoyed this video on market maker models. If you want to learn more about how I trade and the 7 lessons that I learned across my 14 years of experience in the markets, make sure you check out this video right here, and I'll see you guys in the next one.